This is the Coach's Playbook from the coaches at Top Step, formerly Top Step Trader. Today is what, the 11th, 12th? It's a Tuesday. Thanks for joining us. If you're live, Dan, I saw you shrug there. What was that about?
No, I'm just laughing. I'm thinking like it's like the 12th addition to 2021, the 12th added or 2020. So it's like the extra 12 days of 2020 at this point. Like I just feel like I thought 2020 was over and we were going to start fresh here this year. Nope, everything's staying the exact same. Nothing
Yeah,
makes sense.
I hope the proverbial shit hitting the fan isn't increasing exponentially as we enter 2021. But with
Well,
that in
20
mind,
turned 21. It learned how to drink.
oh God, yeah, just the thought of that is giving me hives. That being said, today we're going to talk about a phenomenon. We kind of were talking yesterday on our Slack channel, and I think it was Hogue that mentioned we're kind of experiencing a little bit of the melt up part two, and some of this reminds us a little bit of how the markets were behaving early last year before something happened. I can't remember what, but we thought today we talk a little bit about trading those markets as they're grinding higher, and throw in some things that are going a little exponential. Talk a little bit about Bitcoin and Tesla right now because we have an interesting stat about that. But first, Mick, you want to throw out a bit of trader? I was going to try and change the words there, but trader shout out for us.
Yeah, I'll throw out the good stuff here. We've got Adam Geltz, who's up about $7,000 trading the Nasdaq this morning. It's a really big day, so very happy for him. So keep up the good work.
That's awesome.
Yeah, that's a fifth of a Bitcoin. We're going places. But no, that's a awesome job in that. I'll be excited to see what he did exactly to do that. But I presume right now Dan was mentioning that the market rolled off a little bit. But to get to our topic today, obviously the equity markets have just been on an absolute tear since March 23rd when they bottomed out. There seems to be really nothing that can throw cold water on them at this point. There were a lot of possible catalysts that, if you had told me that by January 5th there would be people storming the Capitol building, I probably would have not taken that as a great sign. But there's a lot of powerful forces. There's the money printing, and there is momentum, which is a huge force. So, John, would you want to tell us a little bit about the phenomenon of the price melt up?
Well, it just every time I see a price melting up like it did, basically like the S&Ps on Friday, I actually put it on in our coach's channel that the melt up is on, and it just always brings me back to dear old dad talking about how the market always looks the best at the top and the worst at the bottom when you have a market that is as ballistic as the S&Ps, as our equities have been. Eventually it gets to the point where the marketplace can't bear the price moving higher anymore. There's too many longs, too many weak money longs. It always seems to be the weakest of traders that get in at the very high, and that's what creates these melt ups. Now, these melt ups can go for any period of time and at any price range level, but it always seems, the market will eventually correct itself when everybody's in and everybody's long. That's when the melt up is occurring. As soon as everybody's in, there has to be some sort of an adjustment. Now, we can say that the S&Ps have been melting up for 40 years, and they do that because a lot of short-term traders end up short against the longer time frame buyers, and they end up short and they just run the market up. There's a short squeeze that goes on constantly in the equities when they are going higher. But when everybody turns the other way and everybody's already in, there's nobody left to buy it. That's when that melt up is at risk of creating some sort of a correction. And it happens whether there's reason sometimes, like last March, and sometimes when it doesn't seem that there's a reason. Like, back in 87, we had a big rally going on, and the Dow lost 501 points, and it was like 40% of the value back in 1987. that was a kind of an example of a melt up that everybody finally got in, and there was nobody left to buy it. So the market turned around. Now we've got, other markets that are in melt ups right now, and you don't want to fight it. You certainly don't want to fight it because you're going to get run over. But at some point, there's got to be some relief valve that's going to hit.
Yeah. So there's a little bit of tension, and this is kind of what I would love to hear Dan and Mick's opinion on. There's tension between two things that we discuss here. And one of them is that we constantly harp on trend being your friend, to go with it. But at the same time, we talk about these corrections that'll inevitably come and how to identify them. And so Hoag's right that you shouldn't try and fight this if things are going up. But I think the key is not developing a blind faith in, and I see some of this, and it's been, God love him, it's been working so far, but a blind faith in just buying the dip to the extreme, which is fine if you're a long-term investor, but if you're in a margin account or something leverage, that can perhaps spell your end. So Dan, do you have any thoughts on that?
Yeah, absolutely. First off, I got to make a point. John's talking about 87, the crash. I just watched this weekend. I watched Wolf of Wall Street. Every so often, it's a great movie to put on, get a good chuckle. I wouldn't say it's 100% realistic of the traders in the 80s, but I wasn't there, so I wouldn't know. But he made a comment. He goes, my first day was the crash of 87, and the market fell 500 points. And I just kind of chuckled to myself. I go, at this point, we got to stop using the points terminology, say percentage, because how often do we get like a notification on our phone from a news channel saying stocks are down 1,000 points? Is it time to panic? No, it's not. Like that's that's a small percentage.
Yeah, it's weird because we talk percentages, but then when people trade futures, which you got to watch the points. So.
Right. So, but beside the fact there, so when it comes to a melt up, first off, there's a couple thoughts I have. First off, fighting the trend. I'm not one to sit here and say, yeah, fight the trend. But as discretionary traders, it's our job to recognize when market states are changing. You can see it right now, like equities kind of are starting to spill over a little bit. We saw NASDAQ's been kind of leading up to it. NASDAQ's been a laggard. And for the last 12 months, or longer, NASDAQ's been the strongest trendsetter of a market. So is it telling us right now that things are about to change a little bit because it's struggling? We know Tesla is one of the strongest stocks out there. That one continues to go high, but we're seeing NASDAQ start to stumble. If you start to recognize that these markets are falling into a pattern and they're struggling to inch higher, that's when you have to make an adjustment. You have to start looking at where's this market trading at right now. The last 3 days or so, we've been really in a tight channel. That's when we start saying, okay, we've adjusted from trending higher on a short time frame. We're starting to fall into some sort of range bound trading. Therefore, we have to implement some sort of range trading strategy. What that is we're defining some sort of channel, right? We've done this before. We've had that idea, and you're not looking for these huge upside moves or these huge downside moves. Kind of fall inside of that. Wait until that market's going to tell you anything else. So that's one of the biggest things for me is you can't just base it off of, okay, it's equities. They're going to move higher. That's what they do. Absolutely. Over time they are. But as a day trader, discretionary trader, our job's to recognize that, hey, market states are starting to adjust right now. We have to be quick to those adjustments. If we're not recognizing it and we're just taking loss after loss, trying to go long every time this market kind of dips a little bit, then we got to pull back. We got to stop for a little bit. Ask ourselves, what am I doing? How do I adjust my time frame? This was actually a question I got asked yesterday on the market recap. Someone asked me about it and said, how do I start to recognize the difference? And after we chatted for a little bit, started finding out that they're looking at smaller charts, 5 minutes and 1 minute. Open up your time frame that you're looking at so you can start to see a bigger picture of what that market's doing. If it's a 30-minute, I really think a 30-minute chart's pretty great to look at for a day trading standpoint. Everyone knows I love a 4-hour chart, but that's more acceptance. I'm looking at a little bit different there. When it comes to day trading and trying to get an idea of current day trading market state, that 30-minute chart is going to kind of give you a little better of a picture. Open it up, fill up the whole screen so you can have 5, 6, 7, or 8 days of trading in there. And you get a better idea. So I think ultimately, absolutely, we're always going to see these things grind and they're going to push higher. No bad news means good things for these markets. But you have to constantly be checking, where is this market state? What is it doing today because my job as a day trader is to trade what today's going to give me, not what tomorrow's going to bring, not what next week's going to bring, not what's going to happen a month down the road.
Right. And keep an eye on two things that I'm looking at during this rally. And they're not as, at least to many day traders, not as sexy as stocks, but looking at the bond and looking at the dollar. I know you FX people are doing that, but we saw yields start on the 10-year start to creep up a little bit this week. And if those start creeping up, if the dollar starts to strengthen a little bit, I think a lot of this too is just the dollar has been weakening, and that's going to increase the price of stocks. But those two things, if they reverse, especially if those yields start inching up, be careful. That's all I could say about that. We could spend a whole time talking about the reasons why and stuff like that. But the Fed is always late. Have you ever seen the chart? There's a great chart of every Fed prediction of interest rates in X number of months and years, going all the way back to like 1980, and they overshoot with 100% accuracy, right? So they're always, it's like turning around a boat, but if the market starts, selling bonds, something to watch out for. Mick, it doesn't have to be about that, but anything else you want to add about the grind market?
Certainly. I like talking melt up. It's something interesting, and it's an environment that we see in the markets often. Around my discussion on the melt up, I like a couple things actually a few things. John, I liked how you talked about the weak money. Danny, I liked how you talked about the higher time frame. Jack, I like how you talked about looking elsewhere for maybe little indications as far as what we could be seeing in these markets. For starters, as a day trader, you're going to make the most of your money catching a piece of the trend for the day over time. Yeah, sure, you can make money with counter trend trades, but like Danny said, take a look at the higher time frame. What's the market environment? We know, and we're talking about us melting up. The melt up is a grind higher. Dan, it just seems like we kind of creep up every single day. As a trader, it might at a quick glance say like, we're going up every single day. I just need to buy them and I'll be okay. Well, where most traders struggle, and I've found this with my own trading as well as what I see with other traders trading, just because we're grinding higher doesn't mean it's easy to make money taking long trades. Your trade location is very, very important. And in regards to the higher time frame and the weak money, if you're buying new highs, yes, you're taking trades in the direction of the overall trend, which is so important to be aware of. However, if there is a little sell-off during the day, those weak money positions, and weak money is people that buy highs, when the market falls down, they're going to get shaken out of their trades, stopped out, whatever, have to puke their trades. And in many cases in these melt up markets, you get stopped out where the market stops going down and then it turns back around and goes to the upside. It's really, really difficult to be a buyer of new highs. What I would suggest for traders to think about is look at that higher time frame and look at a daily chart and see where we've come from over the last 2 sessions, 10 sessions. Are you someone, have we seen 10 days low to high, so 10 days up on the daily chart? Are you someone that's buying or going long the market after it's gone up 10 straight days in a row? Well, the odds of continuation as you have more of those up days decrease. So you could be a buyer on the 10th day up, and it could be a sell-off day followed by another sell-off day followed by another sell-off day. So if you want to follow the trend, and you don't have to, you can day trade and still follow the trend. In these melt ups, you might look to be a buyer. Maybe you're sitting on your hands. You don't want to buy new highs. You can buy new highs and make a little bit of money, but look at a daily chart and try and find an opportunity where, hey, we're in an uptrend, but we've just sold off for the last 2 or 3 days in a row. This is a pullback that might be a lower risk entry for me to, play from the long side. And if you're buying the market on a pullback and it starts turning in your favor, then you're not really in the weak money position. You're kind of in a firm position where you've got some, open trade equity on your side. So that's what I think people need to. I think it's one way to frame it out, and I think it's so important to frame it out. I could continue on, but I think I got my main point across.
Yeah, and I just want to clarify one thing that Mick said too with the 10 days in a row. That's different than it sounds an awful like the lot like the gambler's fallacy, which if you're not familiar is for many gamblers to know, it's like if you bet on blackjack or roulette that if you lose 10 hands in a row or something like that, oh, you're due on the 11th. No, it's the same probability. Now, the markets are a product of psychology and have a lot of underlying things where I'd have to go back to look at what the odds are and that, but it's more that the market might be getting extended at that point. So it's a different, each day has a different feel to it. There's different factors that are affecting what moves prices. So I think what Mick said is definitely a true point. And we want to throw one more thing. We've been talking about the grind. Might as well touch really quickly on the securities that have just been going supernova in the last, a while, but Bitcoin and Tesla stock, which we were shocked to learn have pretty much the same market cap right now. I don't know what you would call Bitcoin's.
I just did Bitcoin. I just did the quick calculation again based off of if Bitcoin's trading 35,000. We're sitting at like $735 billion market cap. Tesla, when I look at it right now, let me grab the right mouse here. Tesla's market cap at the moment is approximately $810 billion. Just shy, both of them just shy of that $1 trillion mark. I think Tesla has a better chance to get to the $1 trillion mark than Bitcoin. But who am I to say at this point? I didn't think Tesla or Bitcoin we'd be talking about at 35,000.
Now, I don't follow a lot of Bitcoin, but I was kind of surprised. I would have just thought if you just asked me yesterday and said, what do you think the value of all outstanding Bitcoin is? I would have guessed a couple trillion. So I don't know. Maybe that means I should go out and buy Bitcoin. I'm not going to, but I don't have. As I get to my mid 30s, I'm afraid my heart would give out if I was involved in something like either of those. But Tesla just. How many $1 trillion companies are there?
Not many. I think there's 4. So real quick, I do want to give a couple shout outs here. We got a couple questions too. We got people talking about questions about Bitcoin and Tesla. So I want to say hello to everyone first. Sure. Alan, good to see you. Felix, Ryan's got a question. Can you trade Bitcoin futures with Top Step? Not at this point, Ryan. Always trying to add more products, but at this point, Bitcoin margins, it's not a safe product to be trading in.
One Bitcoin futures contract is equal to 5 Bitcoin. So you can do the math on the valuations there. It's an extremely expensive contract with extremely high margins, and it has 20% moves. Yesterday morning, I pinged these 3 guys and just mentioned, hey, if you bought a 1 lot of Bitcoin futures on the close on Friday, when Bitcoin was down about 20% on the day yesterday morning, so you would have been out over $42,000 on a 1 lot. So
scary.
We'd like nothing more than to do it. Just right now with the margins on it, make it very hard for us to offer.
I think ultimately the CME will do similar stuff that they've done with a lot of these products, maybe down the road with Bitcoin having such popularity. Maybe we'll get to a mini and maybe we get to a micro and they can start to fraction these things off eventually. Level 2 is saying hello to people of Earth. He just sold a few shares of Tesla at $850 and he's got a question. Jack, this is probably a good question for you. Sure. This is very technical when it comes to percentages and all that. So I'm going to throw this one at you. Do you think accumulation in Tesla from the S&P tracking funds complete to balance the 2% approximate value of the S&P 500?
Level 2, that's a great question. I haven't looked into the exact ramifications of it. I've stayed mostly. I'm super stoked that you've been in it the whole time. I'm kind of shocked that you sold a few because I thought you were right or
had die. Some unexpected budgeting he needed for the house that he's building.
You could build a few houses. I don't know. It'll be interesting to see. I thought, and this is why I don't get involved with it. I would have thought it would have rolled off hard after the inclusion, sort of buy the rumor, sell the news. I would have to look further into that. That's something that I'm interested in because you're right. It was, I believe, it was by far the biggest relative market cap to the S&P stock that they ever included in it. So I'll take a look at that, and I'll get an answer for next week. That'll be my lead in.
All right, perfect. Justin just saying, really appreciate the analysis from us. Thanks for that, Justin. Zork just talking about martingale betting systems. And then Ryan's saying Bitcoin market cap 645 billion.
Yeah, those martingales, I tried that, true story, at the last time we had an in-person Top Step holiday party. So last December, we had a table there for blackjack, and I was way up. And then at the end, I was trying to leave or whatever. So I was just like, I'll straight martingale it, because you won prizes with this fake money. It wasn't real money except for prizes. And then I proceeded to lose like 7-8 straight hands in a row, including nothing. So it works as long as you have an infinite bankroll, but unless you're Elon Musk these days, that's tough to do.
Absolutely.
All right. Well, that's all I have in this one for now. Dan, do you have a quote to ease us into the depths of the week?
I do. Obviously, we have a lot of upset around the country. So I'm going back to one of the founders of our founding fathers, John Dickinson, saying, "United we stand, divided we fall." So let's all just be happy and be together. It doesn't matter what side you're on here. Let's just all be happy.
Yeah, I think that's a good thing to do. Well, for Jack, Dan, Mick, and Hogue, this has been Coach's Playbook for this week. We hope you come to join us next week. We're going to try and get more consistent. Maybe we'll add some effects like Around the Horn on ESPN at some point. But we're doing the best we can in our various closets and second bedrooms. So, Hogue, you want to send it off?
Sure. When it comes to directional markets, if it's strong to the upside, buy weakness. If it's weak to the downside, sell strength. Get out there and profit.